Time to check out our grain trade. I'm Marlon Bowling with you as we navigate through our Wednesday. Let's take a look at what the futures are doing here in Chicago. On the corn market, it's been kind of one of those slow days. We have the September corn currently at $3.60½ per bushel. It is now down 1 3/4 cents. It is just kind of chopping around on both sides of unchanged, just meandering, I guess you could say, in the daytime session. We have the December corn now at $3.74 3/4, and that is now down 1 3/4 cents as well. Now keep in mind that USDA did announce a couple overnight export sales. One was 59,000 tons and one was 55,000 tons. They were both to unknown destinations. The 59,000 ton total was for the upcoming crop, the new crop. The other was for the old crop. Also, let's take a look at our soybean trade here right now. And on the soybean market, we have had a softer tone here today. We have September soybeans down 5 3/4 at $8.62½ per bushel. We have November down 5 1/2 at $8.74 1/4. And the wheat trade has been weak today. We have September Chicago wheat down 11 1/2 cents at $5.30 1/4. Kansas City wheat has September now trading 8 lower at $5.37 3/4. And in Minneapolis wheat, we're down significantly. We have September down 9 3/4. We're at $5.86 1/2 per bushel. Scott Gecas joins us now. He's with Longleaf Trading in Chicago. And Scott, why the bearish tone on the trading floor today?
The bearish tone pretty much across the board. Doesn't really matter what you're looking at. Is all the news that's coming out of Turkey, the strong U.S. dollar is putting pressure on all the commodities across the board. Traders here are looking at the rain in the forecast in the next 7 to 10 days. If we get that 3 inches of rain or more, that has the potential to push the yields above 53. We haven't seen yields above 53 in quite some time. On a technical level, in the front month in soybeans, 860 is support, November 870. If you see those break, you're going to see another spike in volume, another spike in volatility. We have room to run, especially after Friday's report.
All right, we are looking at a September soybean chart right now, and it has been a bumpy ride, that's for sure, after a very, very long slide there in the middle of the growing season. It seemed like such an early top to the market this year. How unusual is that, I guess, is my first question to you, that we top that soon in the growing season?
Yeah, just in general, just across the board, this is a very odd year. You have all the trade war talks, the tariffs, Trump tweeting back and forth. You have Trump risk, headline risk. Everything is pretty much thrown out the window. You've seen the flight to quality, just looking at the metals just across the board. They're in an absolute free fall. I think the 3-year low for silver was around 16, and now it's trading around 14.65. That's pretty big.
Okay, on the corn, there is some discussion among analysts that USDA had such a high yield estimate that they say it's going to be really hard to actually fulfill that national average yield just because we have so many problem areas, such as in Missouri or eastern Kansas. In the western part of the Corn Belt, a lot of corn was even abandoned. It was so bad. In record-setting years, usually they can kind of get all the boats to lift at the same time. That may be hard to do this year.
Yeah, I agree with you. The yields came in around 178.4. It's the lowest stock usage ratio since 2013. The biggest problem right now is going to be the weather. Can the ground actually absorb this rain, or is it just going to run off? That's a big concern with the next 7 to 10 days.
Okay, yes, absolutely. With a lot of rain in the forecast, we're going to have to keep a close eye on this. Also, I understand a lot of old crop cash corn coming to town as farmers clean out the bins and get ready for the upcoming harvest as well. So it's hurting basis around the country. Scott, stick around for a moment, and we will talk about livestock. We'll take a look at our cattle and our hog futures on the other side of this break. What do you say we go back to Chicago and pick up our conversation that we have going on with Scott Gecas? And he is there at the edge of the trading floor, and he's with Longleaf Trading. All right, Scott, looking at our livestock trade today, as opposed to what's going on in the grain market, we have the livestock a little firmer today overall. Let's take a look. Live cattle really couldn't make up their mind which way they wanted to go in the early going today, but they are firmer across the board now. We have October up $0.50 at 109.22 per hundredweight, and we have December December up 60 cents at 113.02. Those are kind of in the middle of our trading range today, by the way. On the feeder cattle market, we'll start out with the September this time, and that is 92 higher. We're at 149.60. That is about $1.50 off our earlier low this morning. And October now up 70 cents on the day at 149.60. On the lean hog trade, this is the one that at times it looks like maybe it wants to hit that sell side again, and now it's firming up again. We have October lean hogs 27 higher at 52.12, and that's 90 cents or so off of its earlier morning low. We have December now 40 higher again at 49.05. This market is really hard to figure out here, Scott. It keeps throwing head fakes in both directions all the time.
Yeah, for sure. You know, with the cattle market and as well as the hogs, protein complex across the board, there's tons of supply concerns. In the cattle on feed up 9% versus the 5-year average. That just confirms that there is even more supply concerns. Production still increasing on the fourth quarter, where it usually pulls back. Cash traded around 109.5. That's a little bit lower than what we've seen in recent weeks. So that's definitely a concern. The fact that the cattle market as well as the hog market is holding higher with the strong dollar, that gives us a little bit of optimism to the upside.
All right. Now on the cattle market side here, we have the cash cattle trade. Last I heard yesterday, the trade on a live basis would have been around 109.50 or so, even though it was a very, very light trade. Wouldn't that be about $1 under the previous day, maybe steady or so with what we had about a week ago at that time?
Yeah, a week ago they traded around 113. 2 weeks ago they traded around 115. So the cash market is coming off pretty hard. So it hasn't really reflected in the chart yet. We're going to see how that's going to play out in the next few days.
Okay, demand-wise, who's going to gain the upper hand as we get into the holiday season? We're going to have to look past Labor Day now because that buying's all done already.
Yeah, well, that's one of the things I wanted to point out. You know, there's a hand, foot, and mouth coming out of China. They had to slaughter 8,000 pigs. I mean, that's pretty significant. When something like that happens, you have all the disease concerns. You know, they're not going to let pork leave the country at all. So the demand for U.S. pork is just going to increase. That was confirmed yesterday with WH Group having orders from Japan, South Korea, as well as Mexico. We just got to wait and see how those exports really play out, though.
And I thought it was interesting, the point that you made a little bit ago, the fact that we have the dollar significantly higher than where we were a week or two ago, and yet you have the lean hog trade actually rebounding from the contract lows that we made last week. Exports have been hanging right in there on this pork side too, haven't they?
Oh, yeah, for sure. You know, if we get a little bump up in the exports, especially with the WH Group having those reports coming out, I think you're going to see a little bit of a rebound in the lean hogs. If we get any positive news out of NAFTA, or if Mexico releases that 20% tariff, you're going to see that market spike really hard, really fast.
Scott, thanks for all the comments on the markets. Good to visit with you, sir. Appreciate that. Scott Gecas is with Longleaf Trading, and he is based right there in Chicago, right at the trading floor. The noise you heard in the background, he said, was trading in the euro-dollar options, in case you're wondering.
Interesting.
So, yeah, a little bit of currency dynamics going on now globally.
All right. Thank you very much, Marlon, as always.